I'm Mark Lapp. Welcome back to the Financial Literacy Project, presented jointly by the American Bar Association's Tort, Trial, and Insurance Practice section, along with Thomson Reuters. This is the sixth segment of the Buying a Car module. In the prior segments, we discussed buying a new car versus used car. In this segment, we will cover what you need to know about insuring your car. Please read our disclaimer in full. In short, these materials and any forms or resources we reference are intended for educational and informational purposes only. What kind of insurance do I need when I buy a car? Most states and Washington, D.C. require you to have insurance to drive a car. There are a couple of states that do not, Virginia and New Hampshire, but even there you need to meet certain conditions. New Hampshire requires proof of financial responsibility. If you cause an accident and don't pay for the damages, your license can be suspended. Virginia requires a fee of $600 to operate a vehicle legally. You are better off putting that $600 toward an insurance policy. As a practical matter, if you're driving in the United States, you should have insurance. Before we talk about what kind of insurance you need, let's review the different types of coverage in a car insurance policy. Liability coverage. This part of the insurance policy pays for damages to others if you cause an accident. It is broken down into two categories. First, bodily injury liability. This pays for damages when you injure someone in an accident. Second, property damage liability. This pays for property damage you've caused to others in an accident. For example, damage to another motor vehicle or another's property, such as guardrails or fences. Each state sets the minimum amount of liability coverage you must have. For bodily injury, many states have minimum limits of $25,000 per person and $50,000 per accident. This means that your insurance company will pay up to $25,000 to any one person injured in the accident, with a maximum of $50,000 if there are multiple people injured. For property damage liability, most states require single limit coverage. For example, $15,000 per accident. This means that if you cause an accident with one other car, the owner of that car could collect up to $15,000 from your insurance carrier. If you damage multiple cars or other property, there would still be only $15,000 available to cover all claimants. If your liability coverage is insufficient, whether it's bodily injury or property damage, you will be responsible for any damages beyond the limit. Personal injury protection. Personal injury protection, also known as PIP or no fault, covers medical expenses and lost wages, regardless of who's at fault. Medical payments coverage, or MedPay. This is similar to PIP, but pays only medical bills for you and passengers in your car, regardless of who is at fault. Collision coverage. This covers damage to your car after an accident, no matter who is at fault. Comprehensive coverage. This covers damage to your car that happens when you are not driving. For example, vandalism, hail damage, or theft. Uninsured and underinsured motorist coverage, known as or UIM. This coverage protects you if you were involved in an accident caused by an uninsured or underinsured motor vehicle. Most of the time, it covers only bodily injuries. In a handful of states, it covers property damage as well. This coverage is broken down into two types. Uninsured motorist coverage, known as For coverage, your own insurance company will pay you as if the uninsured driver had the same coverage as you. For example, if you had coverage of $25,000 per person, $50,000 per accident, and the other car was uninsured, you and the injured passengers in your vehicle could collect up to those limits from your own insurance carrier. Underinsurance motorist coverage, known as UIM, is where the other driver had insurance, but the limits are insufficient to cover you for your damages. For example, if you had $50,000 underinsured motorist coverage and the other driver had only $25,000 in liability coverage, you could potentially claim the difference, $25,000, from your own insurance company. In some states, UIM is an add-on insurance. That means your coverage, for example, $50,000 UIM, is in addition to the other driver's insurance. With add-on UIM, you could collect the full $50,000 of your policy in addition to the other driver's $25,000. Other optional coverages. There are other optional coverages that may vary from carrier to carrier. These may include rental coverage, which pays a certain amount for a rental car if your car is undrivable due to an accident, gap insurance, which pays the difference between what you owe a lender and what the car is worth if your car is totaled, and towing or roadside assistance. How much insurance should I buy? Mandatory coverage. Virtually all states require liability coverage for bodily injury. All states, without exception, require property damage liability coverage. Remember, each state sets its own minimum limits. The most common is 25, 50, 25. That means $25,000 per person and $50,000 per accident for bodily injury and $25,000 per accident for property damage. About a dozen states require PIP insurance. The minimum limits are set by each state. 21 states require UM and UIM insurance. The limits generally need to match what you have for liability coverage. For example, $25,000 per person and $50,000 per accident. Only a couple of states require medical payments coverage. Optional coverages. Collision coverage and comprehensive coverage are optional in all states. If you are making loan payments on your car, the lender may require you to carry full coverage. This means that you will need to buy collision and comprehensive coverage in addition to the state-required coverages. Medical bill payment or MedPay is optional in most states. PIP and and UIM are offered as optional coverages in those states where they are not required. Rental coverage, gap insurance, and towing and roadside assistance are optional in all states and are offered by most carriers. If you are on a tight budget, you may consider buying just the mandatory amount of insurance required by your state. For drivers just starting out, this may be the only realistic choice. You do need to keep in mind that the minimum required coverage may not be sufficient if you cause an accident that results in substantial personal injury or extensive property damage. Deductibles. If you choose to buy collision and comprehensive coverage, or if your lender requires it, you need to know about deductibles. A deductible is what you pay from your own pocket before your insurance kicks in. Deductibles may run anywhere from $250 to $2,000. A lower deductible means a higher insurance rate, but you will pay less out of pocket if you are in an accident. A larger deductible means a lower insurance rate, but you will need to pay more out of pocket if you are in an accident. Some lenders require a certain deductible, for example, no more than $500. So a higher deductible may not be a possibility. Some insurance companies will reduce your deductible the longer you go without a claim. Some companies also offer glass coverage with a zero deductible. How much insurance can I afford? The only way to decide what you can afford is to check with several sources before buying your insurance. What you ultimately pay will be affected by many different factors, such as the amount of coverage that you need, where you live, and your driving history. Also, the number of drivers in your household, and other factors. There are several different ways to buy insurance. For instance, you can buy directly from an insurance company. Many of the larger insurance companies have online systems that will allow you to get a quote. One disadvantage to this is that you will have to go through each company's system and compare them on your own to find the best deal. Also, you may not get the one-on-one advice you need to buy your policy. You can buy through a captive agent. This is an agent that carries only one brand of insurance. One advantage is that you can meet with an agent locally or speak to them on the phone to get your quote. A drawback is that you're still only getting a quote from one company, and you may have to visit several different agents to get the best price. You can buy through an independent insurance broker. This is a local agency that sells the products of different insurance carriers. Sometimes these are smaller carriers that do not have a dedicated online system or dedicated local agents. One advantage to a broker is that they can get quotes from you from several different carriers. The downside is that some agents may charge added fees or only show you quotes from certain companies. You can buy from online marketplaces. There are several online marketplaces, sometimes called aggregators, that claim they can show you the rates from several different carriers at one time. In theory, this seems like it may be a good way to compare rates. Some of the disadvantages, though, are that you won't be able to visit an office in person or speak to someone locally by phone. Also, not all carriers participate in these marketplaces, so you are not assured of getting the best possible price. Some of the rates shown by these marketplaces are estimates, and you may not get that exact number when all your factors are considered. Also, many of these marketplaces will collect your information and provide it to carriers for marketing purposes. If you use one of these sites, you may want to use at least one of the other methods above to make sure you are getting the best price. Regardless of how you obtain your quotes, it is recommended that you get at least 3 before making your decision. You can figure out what your costs will be just on the minimum required insurance, and then what it will be if you increase the limits or select optional coverages. Ultimately, it is suggested that you buy the highest coverage you can reasonably afford. That concludes this segment. We hope you now have a general understanding of how to insure your motor vehicle. In the next segment, we will cover what you should know about auto warranties.